What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD where we had two epic trades using the ICT macros. First trade is currently sitting at just under 17R, the second trade 5.7R. Full transparency, I closed this one out at 2R and I closed this one out at 2R, so I should have been leaving runners on these trades. With that said, let's jump into the analysis now, see how these two at least presented themselves and what we can learn from this session. As we do every day, we're going to start off our analysis looking at Forex Factory, just to see if we've got any red folder news that's going to affect the trading session. So today is Tuesday, January the 23rd, and we have no red folder news in our London session today. However, we can see that tomorrow is packed full of red folder news. Euro, Pound and USD all have big major news drops. So today we could find we have some consolidation, bit of erratic price action while we prepare for the big drivers that are going to drop tomorrow. So something to be aware of as we head into the session. Now before we do jump over into the main charts, I would really appreciate it if you just take 1 second just to smash that thumbs up button and show some support for the channel. I'm really enjoying creating these videos and seeing your support, well, it just inspires me to turn up every day and share my analysis with you. It's helpful for me personally, but also I think it's great that so many of you guys find value in it. So please go ahead, drop the video a like and then let's jump into the charts and see what London has for us. Here we are on the daily chart. Same analysis as we have done all through the previous week. Draw on liquidity is going to be this swing low here. We are rejecting from this bearish fair value gap at the moment. The displacement is bearish, so we have bearish displacement coming to the downside. I believe as we are delivering from a bearish PD array, we will be seeking external liquidity, which would be at the moment this liquidity here. We clearly have a swing low here that was generated last week. So a more local draw on liquidity could be a potential target. The reason that I have a higher time frame bearish bias is that we have swept relative equal highs here and then we have closed back inside this range. So if we sweep one side of the range, we expect the opposing side of the range to get swept. As I mentioned yesterday, we are currently sitting bang on optimal trade entry. So this is kind of a key decision point. Are we going to deliver from this area for lower sell side liquidity, or is this going to be the reversal? We've swept a swing low at this point. Are we going to get a reversal after sweeping this liquidity to continue higher? Following the displacement lower at the moment. I'm seeing large displacement candles in more local price action. Therefore, I'm planning on taking short trades looking for lower prices. Let's jump now onto the 1 hour time frame and see how the charts are setting up on the hourly. So here we are on the hourly chart now, just prior to London opening up. So we can see we've had a very large displacement through Asia, rejecting off this 1 hour fair value gap. And we have now taken these relative equal highs, which were yesterday's high. So we've swept previous day's high, displacing higher, looking at potential resistance areas because I am bearish off that daily bias. We've got this order block here as a potential rejection zone. We do have this been tapped, so it is mitigated, but we do have this fair value gap as well, just above the 50% level of that hourly order block. You can see this highlighted green zone is our daily fair value gap that we are right in the middle of at the moment. So consequent encroachment of the daily fair value gap. So we've had a sweep of previous day's high into an order block. So this would be a logical place for a reversal to occur if we are indeed seeking sell side liquidity, which would be these relative equal lows here. And obviously as we've had such large displacement up, we do have the Asia low as a more local target if we do get that reversal. I'm going to drop onto the 5-minute time frame now. We will start scrolling through price action and see how this plays out. Here we are on the 5-minute. See if we get set up with any kind of reversal from this area. So if we are looking for our unicorn model reversal, currently we have this swing high to a low. This has then created this high. So we would want to see displacement through this, which is currently an order block. If this fails, it will be classed as a breaker block. We have a fair value gap somewhere inside that breaker block, we can look for our 5-minute unicorn entry for a continuation lower. So that would be the 5-minute play. I'm keeping my eyes open for the macro at 233. We have a 233 macro. We may potentially get an entry based on that. Let's scroll through now, see what we get offered. The first candle of London is now open. Obviously, large trend line liquidity, something I should point out, to be fair, actually. This ramped volume here, kind of engineered liquidity. If price starts cascading or breaking structure, we could get a really quick run through all of these low liquidity, low resistance liquidity run through all of this to take out the Asia low. When you do see ramped price action like this, it does make me start to consider the potential of a reversal and a very quick move through all of those stops. So here we have our first break. There's no swing high, swing low on here, so this wouldn't be a unicorn model. As I mentioned, this order block here, if we are displacing through this, would give us our 5-minute unicorn. So that's currently an order block. We are closing through a bullish fair value gap at this point. What I'm going to do is I'm just going to delete the daily fair value gap. We know we're inside a daily fair value gap. The colors are putting me off. We're delivering from the 1-hour order block. We have the 5-minute order block here, which would be our breaker block. If we do displace that, we are closing over this fair value gap as we speak. So we've got an inversion fair value gap on the 5-minute. That we have just closed through. We have left a bearish fair value gap at this point. We're just about to enter the 403 macro. Sorry, the 233 macro. So we'll drop onto the 1-minute time frame. Our macro opens at 233, which is this black line. So I'm monitoring this on the 1-minute time frame. I am bearish, so I'm looking for a reason to take a short trade now, targeting Asia lows. So we are pumping up into an order block here, just prior to the macro opening. So this is a 1-minute order block that has just been tapped. What I'm looking for is I'm looking for failed PD arrays. So I wanted to see us drive in the wrong direction and then bullish PD arrays begin to fail. And bearish PD arrays begin to be respected. What I'm noticing is this volume imbalance here. So I treat volume imbalances and fair value gaps essentially as the same thing. If we were to get a closure over this with a displacement candle, that would be an entry. So this is the open of the macro. You can see large engulfing candle, engulfing this and closing over this volume imbalance. This will now become an inversion area. So instead of acting as support, it would act as resistance. The fact that we're into the macro, this is an engulfing candle. We have a nice draw on liquidity here for our first target. In lifetime, I did take this short trade. I took it as a market close. As soon as that candle closed, I entered at market. I'm expecting a strong run now onto the lows. The stop loss is just a couple of points above this order block here. So I'm not expecting a pullback. I'm expecting displacement down to the next levels of liquidity. We've engineered at the bottom of this hourly order block all of these really clean equal lows. A very, very nice draw on liquidity. Ultimately, the target is going to be a 2R trade. So I will close out in full at 2R I will go break even as we sweep this level of liquidity. Let's see how this enters. So we are in the trade now. So this was entered at market. Price begins displaying as we expect from the macro. So we do expect price just to drive if we're in the right direction on a macro. You can see the respect of that inversion fair value gap. It was traded through, respected again. So this was a 5-minute inversion. And then price has come through now. So we are break even as we have taken the swing low. Now pulled stops to break even. And then we get a quick displacement through for a really quick and easy 2R. So this is how the macro trades should play out. We're now inside the 5-minute order block. So this is what the order block we were looking at for the unicorn. So the 5-minute unicorn has not presented itself at the moment. And we've already been able to bag a 2R trade by concentrating on the macros. We've established our daily bias, which was obviously bearish. The macro gave us a bearish entry, which was entered into just as the macro opened, and then literally zero drawdown straight to target. So perfect trade in my opinion. We'll jump back up onto the 5-minute time frame now, see if we get presented with this unicorn. So on the 5-minute we do get a pullback into the macro area, and then price does continue. So this is something that I did note after taking this trade. I'm watching how price, I did have a bearish bias for the day. I could have caught the high of the day here. We've just swept previous day's high. Perfect reversal into a macro. I closed out in full at 2R. Looking at the way price action is going, if I'd have just held this, at least left runners, we'll see how this plays out, because this could have been a truly monstrous trade. And one of my issues is a lack of patience, closing out too early. So we did come back to entry, tapped entry, and then have displaced lower after the macros closed. Sweat the sell side liquidity. So we're into silver bullet hour now. We've not closed through the 5-minute order block. So we've not had displacement through this. So we've not been presented with a 5-minute unicorn at this point. Large displacement candle here coming into 330. Taken the low that we had highlighted, so there's relative equal lows. You can see how we'd come down, engineered more liquidity, had a pullback, and then displaced aggressively through them in the silver bullet hour. And we have left a fair value gap here. This fair value gap is overlapping our breaker block. However, again, for me, I wouldn't classify this as a unicorn. There was too much back and forth here. I would have wanted to see decisive action. So this large engulfing bearish candle to continue through without this back and forth. So this concerns me for a 5-minute unicorn entry. We'll leave it on the charts, but I'm not so sure I would take that. Our next macro of interest is 403 going to 430. So this is the 5-minute fair value gap, 5-minute breaker block. So that is the unicorn if we do come back into that area. Our macro is starting again on the black line. So you can see we're displacing lower, very, very bearish price action. This highlighted area is a previous new week opening gap. So these are strong draws on liquidity. Same as the thesis I have on macros. What I was looking at this point as we are displacing lower is where are previous macros as targets. So we can see a New York PM session macro here. And that PM session macro, we're just inside one of the macros now. And then we have this as a draw, which we do have a swing high just above this PM session macro. So the way that I'm viewing macros when I'm looking at these macro trades is they will either act as support or resistance or draws on liquidity for us to go and sweep liquidity. So we could come back, test this as support for a reversal. I'm keeping that in mind. Our macro opens up. we do get strong displacement down. So we're displacing initially straight off the bat down. I'm not looking at taking this at the moment. So in live time, I wasn't looking at taking this trade. I would want it to see a sweep of liquidity, a bullish fair value gap or bullish order block being disrespected for my trade. So I was willing to let this run if it was going to sweep out the liquidity. You can see we didn't quite tap this high that I had highlighted. So we've engineered some liquidity here. Relative equal lows created above a previous macro. I was watching this now, price action on the 1 minute. As we started pumping up, I'm looking for a bullish fair value gap that will get disrespected to confirm we're going to take a run now on these equal lows that we have just engineered. So let me just zoom this in. You can see that we've got low from Asia, low in London. So we've got relative equal lows just above that previous macro, which is the dotted line. So we've engineered liquidity at this point. So I'm hoping that we do get a run on this liquidity inside this macro. So what I'm looking for is I'm looking for a bullish PD array to be created, and then I want it to be traded through aggressively so that I can get in line with price action to trade this shorter. So that we had no bullish PD arrays at this point, so there's no short trade here at the moment. Still respecting bearish PD arrays. We obviously have this swing high now, so we've got a little bit of liquidity. Oh, wrong one. Created internal liquidity here, so this could be an inducement. People look at this as a breaker structure to start going long. We'll get a fair value gap through that level of liquidity. So we've swept this, so a lot of people could be looking at this to start going long. This is a break of structure, fair value gap in there. Maybe they'll take it as a 2022 model going long. I'm looking at this to see if this bullish fair value gap fails, becomes an inversion fair value gap to take me through that engineered liquidity that we've got here into that macro. Keeping in mind that I do have a bearish bias for the day that we established right at the beginning of the video. Unfortunately here we created another bullish fair value gap. So we've got two stacked fair value gaps now. I'd like to see a single fair value gap get traded through. So at this point, I jumped up onto the 2 minute time frame. We leave a 2 minute bullish fair value gap here. So we've swept a swing high. We've got a 2 minute bullish fair value gap. We are into a 2 minute bearish order block. So I want to see this traded through. If we can trade through this fair value gap, respecting this bearish order block, we can see that bullish PD arrays are being disrespected. We've got relative equal lows, engineered liquidity down here. I would take this short, expecting a run into that New York PM session macro. So the reason I jumped onto the 2 minute chart is on the 1 minute chart, we've got several fair value gaps up here. So I just want to see a singular fair value gap, which would be this one. Cleaner price action gives me more confluence for the short trade. Again, respecting the order block. This is the large engulfing candle, so this is what I'm waiting for. I'm waiting for clear, decisive action. So I saw a very large bearish displacement candle closing over this fair value gap. I entered at market. As soon as that candle closed, stop loss above the high, the 5 pip stop loss, and then I'm aiming for a 2R trade. Obviously I have this level of liquidity here, so I will be taking partials as we sweep this level and going to break even at this point. I'm not sure if my trade management was the best on this particular trade, so I was a bit emotional taking this one. Don't quite know why. I suppose because we're shorting right down at the bottom of the range maybe. So I do think I could have done a better job at this and trusted the analysis more. And just before we see how this trade does play out, if you haven't already, please do consider hitting that subscribe button and turning on the notification bell. I drop videos like this most days, especially if I've been trading, and subscribing will just help keep you updated with all of my latest analysis. So please go ahead, smash the subscribe button. Now let's just see how this plays out and how I could have potentially managed it a little bit better. So market entry in. Immediately we get a pullback. retest into the order block. Now if we go back to the 1 minute, we closed over this fair value gap, but we did leave a bearish fair value gap here. So it makes sense that this would come back on the 1 minute, rebalance this bearish fair value gap. I apologize if this is looking messy. We do have this bullish fair value gap, so we've come back, rebalanced that into this last up closed candle, and now we are rejecting away. So no need to worry at this point. It's kind of expected that this would get rebalanced, but I would like to see displacement lower. Had to zoom out back to the 2 minute to stop myself panicking, keep things clean. And then we do see this fair value gap have a larger close through, flipping this to an inversion. Slight pullback again. We are into this order block now, so we are expecting these order blocks to hold. We're looking at the candle bodies, not the wicks. So the wicks can kind of do whatever they want. It's the body closes that we're looking at. So this is a 2 minute order block. Then we get displacement lower. What I did in live time, I looked at this swing low. After that pullback, I started to panic a little bit. When we took this liquidity here, I took 50% of the trade off and I went break even. This isn't the best trade management at all. It wasn't part of my plan. So this is my emotions getting the better of me. That pullback, even though it was logical now that I've looked at it in hindsight on the 1 minute time frame, made perfect sense that we had this pullback. It should have been expected. It scared me. I think after the last macro trade where we just literally ran to take profit, I was expecting the same thing. And this pullback kind of shook me out a little bit. So as soon as we hit this, I took 50% of the trade off and pulled myself to break even. By going to break even so quickly and closing 50% of the trade off, I'm not giving myself the ability to absorb losses. So obviously this was a less than 1 hour trade now. So I should have let it at least run this lower liquidity before closing that out. We do displace lower, so there was no need to panic here. On the 2 minute we can see we had a very, very good close. Taking 50% of the trade off here after that rejection wick would have made more sense. Price does pull back. We're respecting bearish PD arrays. Does come back to entry. So this is again more logical trade management. Let me see if I can get this out. Would be to use order blocks for the stop loss placement. Shouldn't go break even at this point despite going 1 to 1, because the trade is still valid from this order block here. So the stop loss should have been above this order block. We are expecting this order block to be kind of our last line of defense. Price can come back, rebalance these inefficiencies, and then should respect the order block. If the order block gets traded through, then we are in a buy program. So I shouldn't have been at break even at this point. The order block's respected and price is traded away. So again, should I have taken 50% off there? I don't know. Should I have gone? Definitely shouldn't have gone break even. I should have used a logical stop, being that order block. And then price does eventually tap the order block, begin driving away, and then we can see it just melts. It says melts, consolidating now. It does come down and tap the 2-hour trade, taking the 2-hour TP really, really nicely. So there was no need to panic at this point. My trade management was not good. I need to set some more specific parameters about how I'm going to take profit on this macro strategy. On the 5-minute unicorn model, obviously it's just a set and forget. The macros, I am going to be a little bit more aggressive because it's more localized price action. And so I will be more aggressive with the trade management. But not having a specific plan in place causes me unnecessary stress. So I do need to get a system in place, rules that I can just follow. We can also see, by not leaving a runner, catching this high of day, having taken previous day's high into a large order block. I mean, if I'd have left this thing running with runners, it's 10 hour up already at the moment. Could have added on the second macro if you wanted. I mean, this is how the pros are going to be trading. Obviously, we have the Asia lows as a target, which price displaces through that really aggressively coming into the end of the session. 13, 14R. So this just goes to show really that trade management, there is definite areas that I can improve on these, and I'm still obviously working on the macro strategy. However, having said that, I hope you did enjoy the video. I hope you did like the analysis and you found it useful. If you did, don't forget to smash that like button. I would really appreciate it. Obviously, consider subscribing if you want to see more videos like this one. And if you have any questions or comments, then leave them down below. It'd be great to get your feedback. Thanks again for watching, and I'll see you again in the next video.